So the Federal Reserve has just cut interest rates by 0.50%. It's a very aggressive movement. For the record, Bitcoin is already trading above $61,000 by the time I am actually recording this video. How the Fed cutting interest rates is going to affect the crypto markets, more specifically XRP. Right here we have XRP price on Margex. Not a lot of price action. Honestly, we have almost touched 58 cents. Before we get back to the video, Margex allows you to leverage trading. You can use multiple assets as a collateral such as Bitcoin, USDT, and dozens of assets. I'm personally using Margex for derivatives market and also to see XRP price, which is just powered by TradingView. It has many functions as you can see on the top of the screen, such as trading, copy trading, convert. It doesn't need KYC and you don't even need a VPN if you are interested to trading and also open long and short positions. It doesn't support spot trading, so have that in mind and make sure you understand leverage trading before you actually open positions. You'll find a link to Margex on the description of this video. Now let's get back to the video. And now let's dive on what it actually means for the crypto markets. Let's first understand what does that mean for the overall economy. So when the Fed low interest rates, just a way to make borrowing money cheaper. So it's an attempt to boost the economy, it's an attempt to actually stimulate the economy, bring more liquidity to the markets, which always leads to quantitative easing. So that's when the circulating money supply increases, and that's exactly what we have been seeing for the past 5 years. Printing machines are on for the Federal Reserve, and they keep printing unlimited amounts of money. We all know that this money is just fiat paper backed by virtually anything that is tangible, not backed by gold, but I'll not get on details. I want to make this video as efficient as possible as you want to understand. Lowering interest rates is going to affect the overall economy. So it's a way to stimulate. That usually leads to central banks to purchase government bonds, which ultimately brings more liquidity to the markets. It can lead to people refinancing their mortgages, and sometimes it will just make paying the mortgage, like for some families it can literally mean that the mortgage is going to cost $60 less or $100 less. So as a matter of fact, circulating supply in the economy increases, and well, you might think that's good. Well, on the short term that's good. I'll bring to the screen. It really shows the correlation between Bitcoin price. If you see the chart that's represented in the black line, you have the M2 supply, which you see green on the chart, 100% correlated with the price of digital assets. So historically, when the Fed has cut interest rates, and that has happened in 2019, what happens next is that more liquidity comes to the markets, and then we have an overall spike in the price of assets. Not only digital assets such as Bitcoin, as you can see on the screen, but that also applies for real estate, and that also applies usually for precious metals. But that makes me to raise the question, with gold making new all-time highs, does the Federal Reserve really want to lower interest rates, which ultimately leads to currency devaluation, and then gold becomes stronger against the US dollar, which ultimately is going to favor BRICS nations. So I don't want to get into politics, but honestly, that's a temporary solution for permanent problems. Cutting interest rates ultimately is not going to fix the economy. There's no turning point for the US economy, and on the short term, yes, that might pump the markets and attempt to hide how bad the US economy is right now. It will lead to, ultimately, it will lead to more spending. US debt is going to increase, and also Americans are going to spend more money, which ultimately increase credit card delinquencies, which are in the levels of 2009 and 2008 when we had the previous collapse. Answering the final question, what does that mean for XRP price and digital assets in general? The historical relations suggest that we're going to have a momentaneous spike on the prices. You can even see in the following months a 40% increase in price, which could lead Bitcoin to $100,000. So you can expect a lot of price action for the next hour. The markets are going to react in a positive way. Ultimately, we want to see digital assets to move up. We want to see more liquidity in the markets, even though it's not good for the overall economy. I mean, it's even for real estate, it just makes properties expansive and expansive, but it's ultimately inflating a bubble as everyone's real estate suddenly increases just because there is more money on the economy, which ultimately leads to currency devaluation. Very curious to see the final outcome. So hope you guys enjoyed the video, and I see you in the next video. Thank you everyone, and remember, the link to Margex is actually on the description of this video. Thank you everyone, and see you in the next video.